For millennia, one material has been of relevance: gold. From its luster to its many, many uses, the precious metal has always found itself tucked somewhere into the bedrock of history. Kingdoms sought it, monetary systems were backed by it, conflicts arose from it, and now people trade it. The metal's roles may change over time, but the value and use has always been highly sought after in society.
What you'll notice about gold is that it has really a phase of being incredibly boring and in a phase of being incredibly volatile and makes substantial gains in a very short period of time. In fact, taking a look at the lows in May of 2001, all the way through 2011, we saw a massive 650% rally on gold. This thing just went up and up and up. But for a very long time there, gold did not a lot at all. In fact, this is a recurring theme with gold that we have seen over, the time that I've been trading, but even longer. Taking a look at the daily chart now, what you'll see is that we've been in a relatively long period of sort of this calm-natured gold since the 2020 market correction. During this period of time, in a very short period, going from the lows in 2018 to the highs of 2020, we saw 77% gains on the price of gold. Fast forward to today, again, we have entered into a longer period of hibernation. But what happened last time? Where was the last massive rally on gold? And is it around the corner in the current atmosphere with the global sort of recession cusp concerns that we see today? Well, take a look at this. In 2020, we saw this massive run up on fears around inflation and recessions coming into the world due to the pandemic. Prior to that, though, we saw a similar story in 2008 and 2009. Even after the market crashed, the gold market did come down along with a lot of the rest of the market, similar to what we saw in 2020 with the gold market crashing prior to a massive run up. And then we saw a prolonged period of time, even after the stock market started to rebound, we saw gold explode in value, going all the way from at the lows around $700 to $1,800, $1,900 an ounce. Now, fast forward to today, it's been 10 years and we're still at the same price. To me, gold is long overdue for another period of high volatility in markets where it tends to thrive.
Historically, gold has risen over time. In the last couple years, gold has climbed to the highs of $2,000 while holding an average price of $1,883 in 2022. In the last 3 months, price has been struggling as investors' interest has huddled around the US dollar and risk-off currencies. However, there is a chance that this precious metal will be able to surge on weak dollar sentiment.
We've had a severe inflation problem for over a year now. And we spent the last 6 months worrying about a recession. So why the heck isn't gold doing better? Gold. For ages, gold was widely seen as a stable store of value, the perfect insurance against inflation or any other kind of turmoil in the markets. And we have a ton of it, right? I've always said you should have position in gold, still do. We're one of the best gold miners as an insurance policy. Yet the price of gold has been awful over the past few months, and it's barely up versus where it was trading a year ago. We've seen similarly lackluster performance from the stock of 𝗱𝗏𝗯𝗀𝗏 Gold, which was created a few years ago from the merger from old Barrick with Randgold Resources. Hey, do not get me wrong. Barrick hasn't done badly. The stock's up 3% for the year, trouncing the broader averages. But you'd think all things gold would be on fire right now, given we've got rampant inflation and a collapse in every kind of speculative asset. The conventional money management wisdom says this situation should be nirvana for a gold miner. Maybe gold's negativity has foreshadowed the new tough guy Powell that we saw today. Wouldn't that be something? Look, when you think about what's going wrong with gold, this could be the perfect time to get some exposure to the precious metal.
The metal reacts directly and inversely with bond yields, so higher yielding treasury notes would send its value down. This is the same for interest rates. The higher the yield, the worse for the metal. So, why would gold be more bullish than the dollar now that the funds rate is the highest it's been in 3 years? The answer is because of stagflation. Stagflation happens when there is high inflation and deteriorating economic growth. Pressures continue to mount on the dollar as inflation hits 40-year highs while the hawkish Fed stays the course of aggressive monetary policy. Since March, the Fed has been conducting monetary tightening to counteract the expanding consumer price index, but inflation is still out of control. Consumers are paying over $5 a gallon on average at the pump as spending is forced to increase overall. This has been hitting the wallets of everyday Americans and discouraging the amount of spending that was more prevalent in the years prior.
I hate to be cynical, but why isn't gold higher at this point?
Well, I mean, gold is at a 17-month high right now. So there has been upward momentum within the spot price of gold. And it's a result of, what we've seen from this, geopolitical instability, right? What's going on right now in Ukraine. And that has been a benefit to gold prices in terms of that, long-term volatility mitigation properties it has. I think in terms of, to your question, why it's not higher is, there is some sort of counteracting forces to it. If the dollar continues to strengthen, that typically is a headwind to the spot price of gold. Similarly, we still don't know what Federal Reserve policy is going to look like. We're going to get a great indication on Wednesday when Powell speaks to the Congress. But if the Fed continues on, as Raphael Bostic had suggested, with a 50 basis point hike, that can be counteracted to the spot price of gold.
The central bank even took measures beyond what economists originally expected. Rates flew past the 2% target, while 25 basis point hikes in interest abruptly turned to 50 to keep up with the rising pace. The most recent hike was 0.75%. The combative Fed is doing what they can to curb the devaluing dollar, but nothing seems to quell this upsurge. The CPI keeps coming in hotter and hotter above forecast while the economy slows. The number of layoffs in May increased exponentially compared to other months as the job market slows again. 17,000 new employees were laid off in May, while 5,500 were already let go in the month of June. We can see a startling pattern forming within the last 4 to 5 months. The number of layoffs is increasing with each month, suggesting a huge slowdown in the economy and a looming possibility of a recession. The combination of surging inflation, higher interest rates, and a slowing economy, the US, as well as other countries, have entered a period of stagflation, which is neither good for the economy nor the dollar. This could be an indication to start showing some interest in gold.
Sure. Well, I think we're coming into a pretty major super cycle in precious metals. I think we actually started it back in 2019, and this is about a 5-year cycle for gold. And, it has been a very tough year for equities. We've had a massive bull market. I think things are getting a little long in the teeth in terms of the equity side. And when a stock market gets to the late stages, this is when we see commodities tend to come to life. And we're seeing that. We're seeing inflation. We're seeing rates starting to go up. We're seeing commodities start to go up. And that is a really good sign for precious metals. And when you look at gold, it's had a very strong rally over the past month, complete opposite of what the equities markets have done. And we're starting to see signs of life in terms of what the leverage plays around gold are doing. We're starting to see miners in general come to life, including base metal miners are breaking to new highs. Copper miners have started a new uptrend from a big bull flag. Gold miners are the next one to break and pop, and silver is lagging a little bit, but silver miners typically lag, but they play catch up real quick. So all these things, we want to see the equities for precious metals come to life, because that usually tells us the physical metals are going to follow suit. And everything is setting up for, I think, a perfect storm, a nice big rally across the board in gold, silver, and miners. So it's pretty exciting times the last month. Big turning point.
Institutions are already showing signs of interest. COT data shows us that the number of open long contracts have slightly increased from last week. Price could definitely surge in the coming months, and if it does, we might even see the metal climb well above the 2000s. But could it be possible for gold to reach over $3,000 an ounce? This could take lots of time for things to come into fruition, but we have an idea of how we want to approach this potential gold spike. Because of our long-term outlook, we want to approach gold from a long-term perspective. There are 3 levels or zones where we would consider picking up entry points to build our positions. The first PT is in the 1780s, the second is in the 1670s, and the third PT is much lower in the mid-1400s. We believe these levels to be key in gold's direction going forward. and will be pivotal points this metal could test should price dip lower. These research style videos take our team a tremendous amount of time and effort. As much as we enjoy creating these videos for our viewers, none of it would be possible without the support of our channel members. On the screen, you'll see a list of some recent supporters. If you're a big fan of our work and would like to help us continue making these types of videos, consider clicking the join button below our video. By becoming a member, you'll get access to some behind the scenes content, a personal shout out in one of our upcoming videos, cool badges that you can flash on our live streams, private webinars, and so much more. Most of all, you'd be helping us make all this content possible, and you'd have our tremendous thanks. Please consider becoming a member down below, and we hope you have a wonderful rest of your day.